Hi, this is Lara at Elliott Wave Stock Market with your end of the week analysis for the trading week ending Friday the 27th. Price looks like it's broken up outward from a flag pattern. A target using the measure rule is 2323, but the Elliott Wave target is 2382. I'll expect now Monday and Tuesday we may see a little bit more downward movement. The target's 2284. This pullback should offer an opportunity to join the trend. But look out, there is an alternate wave count which could see movement below 2257.02 to come back down to that purple trend line. We've got some strange behaviour from VIX again on Friday. We'll look at that when we get to the VIX chart at the end of this analysis. Elliott Wave first. At the weekly chart level, cycle wave 5 begins here. The target is for it to reach equality in length with cycle 1. There's no adequate Fibonacci ratio between cycle waves 1 and 3, and the S&P very often exhibits ratios between 2 of the 3 actionary waves in an impulse, and rarely between all 3. Because there's no ratio between 1 and 3, it makes it more likely that 5 will exhibit a ratio to 1 or 3, and the most common ratio for a fifth wave is equality in length with the first. This is also a very nice round number pivot. So what all that means is I expect that this target has a really good probability. Cycle 5 has to be a 5-wave structure. When you look at this at the weekly chart level, you want to see it as 1, 2, 3, 4, but the problem there is if this is 3, it would be shorter than 1. Even if you have 1 ending down here, this would still be shorter than what the first wave would be. A third wave may never be the shortest, and so far, if this is a fifth wave, it's longer than the third. So trying to see this as 1, 2, 3, 4, 5 would violate that core Elliott wave rule. So what that means is it's not an almost complete impulse. It's more likely 1, 2, 1, 2, and now 3, 4 is either over or is going to move down to the purple line, and then we'll see a fifth wave up to end primary wave 3. When primary wave 3 is done, and it's not done yet and the trend is still up, but when it's done we'll enter a big sideways correction for primary 4 that might come down to find support at the purple line, and it can't move into primary 1 price territory below this point. When primary 4 is done, a final fifth wave up toward the final target. So there's going to be another big correction for primary 4 along the way up. Let's have a look at the daily chart with the end of intermediate wave 3. Is this point here. This is the first daily chart that sees intermediate wave 4 over as a combination. We have a zigzag for minor W, a short little zigzag in the opposite direction labelled X joins the two structures in the double, and then we have a 335 flat correction for minor wave Y. If intermediate 4 is over here, it would have lasted 26 days, exactly even in duration with intermediate wave 3, and reasonably in proportion to the 58-day duration of intermediate wave 2. So overall, it has a reasonable look. If intermediate 4 is over here, then there's a limit for intermediate wave 5, because here intermediate 3 is shorter than intermediate wave 1. It's 8.39 points less than equality with intermediate 1. So intermediate 5 is limited to 2,450.5676 points exactly. Let's have a look at how this may be unfolding at the hourly chart level. If intermediate 4 is this point here, and here's minor wave 1 within intermediate 5, and minor wave 2 I expect now, after this slight new low at the end of Friday's session, looks incomplete. Otherwise I'd label it complete there. That was my first expectation. It looks like it's not done, and it's going to move a little bit lower Monday, Tuesday. This subdivides as a 5 on the 5-minute chart. This is a nice leading contracting diagonal. This subdivides as a 3 on the 5-minute chart. It fits as a double zigzag. But from this high to this low, I cannot see a complete 5-wave structure for minute wave C. Minute wave C must be a 5-wave structure, either an impulse or an ending diagonal. I think we have 1, 2, 1, 2, maybe, for minute wave C, or 1 and a second wave correction, and then it needs 3, 4, 5. So I'm expecting it is likely Monday and or Tuesday to reach down to the 0.382 Fibonacci ratio, about 2285. Minor 2 may not move beyond the start of 1 below 2257.02. At its end, this second wave correction should offer an opportunity to join the trend. If downward movement is strong and fast and it moves below 2257.02, then it is possible that this alternate wave count is correct. There's just a little bit of support for it today from classic analysis, but not enough to make it the main wave count. It does remain possible though. Intermediate 4 might be continuing as an expanded flash. If it continues for 4 more days, it may total a Fibonacci 34. That would still see it nicely in proportion with the double zigzag of intermediate 2 lasting 58 days. So this is entirely possible. If we see a new low below 225702, look out for downward movement to come and end when price comes to touch this purple trend line. You can see how to draw that carefully on the weekly chart. Intermediate 4 may not move into wave 1 price territory below 2193.81. The final target and expectations for a primary degree fourth wave along the way up are still exactly the same. At the daily chart level, it looks like we've got an upward trend. It's a bull trend. It looks like we've got a consolidation. This looks like a flag pattern. Within a bull trend, it's a bull flag. Looks like we've got a breakout, a breakaway gap, and now a little curve down for price to come down a little bit further. It'll be absolutely normal maybe for price to come down just a little bit further and find support about this gap. We've got downward day for Friday coming on a decline in volume. Now normally I'd say that's likely to be followed by an upward day, but in this case the balance of what I'm analysing here says that we might actually be about to get more downward movement Monday, Tuesday, and I notice that that doesn't always work. We had a decline in volume here, still followed by downward days to a further low. We also had a decline in volume here, followed by another good strong downward day to a reasonable new low. So that doesn't mean we're going to have to get upward movement. That trick doesn't always work. ADX is increasing still again for Friday. It's above 15. The black ADX line is increasing, so it tells us that there is a new trend. The trend is up and the trend is not extreme because the black ADX line is not above 35 and it's not above both directional lines. So we're still in the relatively early stages of a trend. ATR is overall flat, slightly declining as price moved lower for Friday, previously increasing as we got this breakout and a couple of good upward days. That supports the idea that the trend is up, with ATR increasing with upward movement and declining with downward movement. On balance volume gave us a strong bullish signal here with a break above this very important purple line, but that's been negated now as on balance volume has returned below this line. On balance volume may find support at the yellow line. It's not too far away, and this may assist to halt the fall in price along with support from this breakaway gap. And so that's one reason why I expect still that the main wave count is still more likely. That's why I have not made the alternate wave count the new main wave count. It looks like we've got quite a lot of support here. It looks like we may be about to get a little bit more downward movement, but not very much. So I'll be playing this, using it as an opportunity to join the trend, but I will accept the possibility of a loss because that alternate is still correct. It could still be the right wave count. So I'm going to set my stop quite close. Stochastics is overbought, but this oscillator can remain extreme for reasonable periods of time during a trending market. MACD gave us a bullish signal here. Bollinger Bands slightly increasing. I'd expect them to continue to increase. Let's have a look at VIX because there's something interesting here. And I'm noticing two previous instances where this happened with these blue arrows on this day and this day. On this day and inside day, during the session, overall price moved lower, but inverted VIX for that session moved higher. Normally, inverted VIX and price should move together. As price moves lower, volatility normally increases. As price moves higher, volatility normally declines. But on this day, during the session, price moved overall lower, but volatility declined. It didn't increase. This happened during a consolidation which overall moved price lower, but it happened before two upward days. On this day, the same thing happened. It wasn't followed by one or two upward days, it was followed by a downward day. And overall, it was within a consolidation that moved price lower. So this has happened again. Now, volatility has declined as price has moved lower. Now, normally I'd be reading that as a bullish signal. I'd be reading it as during this session, there's something wrong with the decline in price. It was not accompanied by a normal increase in volatility, which means there's something wrong with price, which means I would take that as a bullish signal. But that didn't work here. Well, it kind of worked here, followed by 2 days of upward movement. But overall, this was within a consolidation that overall moved price lower. I'm going to expect that may very well again be the same situation. This might be an indicator that we're going to see downward movement. And so that's one reason why I'm anticipating that alternate wave count has a possibility of being right. Look out for that one. That's your risk to entering this trend at this stage. As price moved lower for Friday, the AD line declined, so the downward movement in price was corresponded with a very normal decline in market breadth. That's absolutely normal. Nothing to warn us of anything abnormal there. That's all for me with the end of your S&P analysis this week, and I hope that all of our members are having an absolutely fantastic weekend.